India Bonds presents CNBC TV 18, India's Fixed Income Summit.
Well, building India's infrastructure via bonds is something that a lot of us have been talking about for a very long time. And after waiting for very many years, we finally did see that happen. So when you look at India's infrastructure ambitions today, they are larger than the traditional sources of finance. It does need bond markets for that kind of growth, and including into India's finance in sense of country's next phase of urban and infrastructure growth. And that's exactly my first question is to you, Mr. Rai. Have we arrived? Because everybody seems to be saying that, one, we've arrived, maybe, we're starting, but we have seen just so many states and municipal corporations finally reaching out to bonds as the way to raise capital.
Yeah, after hearing Mr. Mittal and the kind of passion he had, I just want to carry forward from there. I think we are at that inflection point. I think the bond market has arrived. Actually, regulators, it starts from there. Actually, even though these thought processes are there for long, a lot of committees on this had happened, right from HR committee to so many recommendations. But we see that actually intervention from the regulator now. All the ecosystem is being built now. I think the time has come that the bond market will fund infra growth of the country. There are certain perspectives we need to build on that. See, the Viksit Bharat dream of 2047, 30 trillion economy, we need to simply double our infra investments. So that to happen, where is the money available? Like, if you are spending roughly 15 lakh crores, about 5% of the GDP is being spent on infra now. But to achieve that dream, we need to have 8 to 10% of GDP spent. Now, definitely this cannot come from budget. This has to come from the private sector. So that is where the bond market comes in. So the ecosystem is being built. We are already seeing that traction. Municipal bonds issuance mentioned, last year we have seen more than 1,700 crores of issuances. And this year, the kind of discussions I am seeing, actually more than 5,000 crores of issuance is given, and there is no wonder municipal bond issuance will cost 10,000 crores next year. Because there are policy incentives and a lot of urban local bodies are really priming themselves for this issuance. But the bigger piece is on infra, because municipal bond is still very, very small market for our requirement. The infrastructure funding, all centered none, it is happening through the normal loan market, actually. And once it becomes operational, that asset need to move to bond market. That is what happens in developed countries. So that is where actually the interventions have to come. Now, once that happens, the bank limits will get freed up, because banks actually are really tight on liquidity now on the liability side. Infra generally happens in 15 to 30 year bucket. And commercial banks are not natural candidates to lend to infra long-term projects. So today, if you see, it is about 34 lakh crores of infra finance book. Out of that is only 12-13 lakh crores which is coming from commercial bank. The rest is coming from the NBFCs and other players like us. Already commercial banks are almost shrinking their share. So now we need to get the bond market in for funding the infra projects. So this is a cycle where the greenfield is still be done by banks because they can assess the risk better. But the operational asset have to move to the bond market. I'll just bring one last point here. Like, while it is some time away before the retailers come into this market, right now we have huge insurance and pension fund market. Because there was a slide on financial savings of the country. If you look at the financial savings, 30% of the financial savings is going to insurance and pension funds, almost equivalent to what is going to the banking. So now their assets under management is growing between 15 to 20 lakh crores every year. But they are not finding way to the corporate bond market. So if the day we are able to bridge that gap, at least 4 to 5 lakh crores of money from insurance and pension can flow to the bond market, and that will address our requirement of infrastructure need for the next 4-5 years.
Mr. Rai, NaBFID was basically created to strengthen exactly this. What do you think is the biggest financial gap that still needs to be covered? I mean, you've given us all the numbers, right? But where do you see the problem now coming in from?
Actually, there is a perception issue. We can call it recency bias. Like the whole investor class, including many of the lenders, feel infrastructure asset is a risky asset. I had a rating agency person
Are you
here.
adding governance issues to that too?
No, there are no governance issues. It is a risk perception.
Okay.
Because generally the default rates were quite high between 2014 to 2017 period. We studied about 2,500 rated infra companies. The default last year was only 0.3%, lower than your housing loan market. So the perception has to change from the investor community about the infra asset class. This is solid asset class. Governance issues we had seen earlier. I think the regulators have done a great job in fixing those issues. We don't see that. Today, as an asset class, it is performing very well. The perception has to change. And till that happens, we have come with a product called credit enhancement, where we are likely to do a transaction shortly, actually, where the A-rated entities, actually there are a lot of discussion in the previous panel also on that. A-rated entities or BBB rated entities, we will credit enhance them to AA. Because asking insurance and pension funds to take BBB or A asset is a long story, it is difficult. They will look for AA. But we will make these bonds AA by first loss guarantee, credit enhancement and all that, so that they can subscribe to that. So we have already started these interventions. We are building this market. So once that happens, in the next 1-2 years, we will see the BBB and A issuances coming to the AA enhanced rating, and then the bond issuance happening. We need to do some work on some changes required on the insurance regulations and pension regulations. We are working on that. Even credit enhancement product from the RBI, last year only the new guidelines came actually. We worked very hard for getting all that modifications done. Now the product has become really cheap. Now we need to do some publicity for credit enhancement products so that this can really do that. But NaBFID is doing its role in developing the bond market.
Mr. Sinha, let me come to you then. And when it comes to urban and infrastructure development, and municipal bond, he tells me slightly smaller in that area, where to ensure that we do not stress the traditional sources of finance too much, what do you think needs to be done, and how far have we come? Where are we headed from here?
A very valid question for when we are looking at the bond market financing the municipal infrastructure. To be very frank with you, as of now, if you see the whole spectrum of the bond market financing, it's about 5,000 crore worth done in last few years, versus the budget size of all municipal bodies in a country like India would be around 2 lakh crore. So it's a very, very minuscule, I would say, a drop in the ocean as far as the bond market financing the infrastructure for the municipal bonds is concerned. But that does not, should not deter us in assuming that there is not enough opportunity for the bond markets to happen. In fact, there is a lot of stress now by the government of India giving opportunities, not only opportunities, but to also certain extent subsidize to encourage the municipal bodies to come forward and go to the bond market. It's not per se the money that we will be able to raise through the bond. It is the discipline which has to be inculcated into the municipal bodies. It is the governance issues that we need to address once we are doing this. It is a trust issue that we have to do it. And it is also the ownership issue when we talk about municipal bond, that every individual who is a citizen of a particular locality is also a stakeholder into that. If we bring in these kind of trust issues taken care of, and the governance issues taken care of, I don't see that there can be any challenge to the bond market, be it a subsidized or any encouragement given by the government of India or the state government or not. It is essential, and as Mr. Rai has pointed it out and Mr. Mittal was saying, that if we have to grow as an economy and we are aspiring to be a 30 trillion economy in 2047, we need to work on financing the infrastructure. And this will come from urban development, not from the areas where you don't see these kind of things. So there is enough sufficiency, there is enough appetite. Only thing is we need to have our structures in place, and we should have the situation whereby we are able to utilize that money for the productive use of an assets creation. If we don't use it and fritter away these chances, I'm sorry and I'm afraid that this will be a missed opportunity for infrastructure development and a growth of the country.
Mr. Mittal was also showing us all those numbers there, and we are really small in comparison to various other countries there. But when it comes to infrastructure and urban development for that matter, and of course the Viksit Bharat and the kind of plan that India is looking at, what are the sectors and subsectors that you would want to form for us to ensure that we achieve those kind of numbers?
Can you repeat the question?
I was asking what really needs to be done to ensure that there is financing happening via the way of bonds.
I mean, now I represent the Bengaluru city, Greater Bengaluru Authority, which is present to 5 different corporations. I head the North City Corporation. So this time we have actually planned to raise 1,000 crores of municipal bonds. Sounds ambitious, but then we are starting with that. And we are going to invest this in the major infra project, so elevated corridors. And we are actually looking into the value capture financing. And we put some impact fee and then surcharges of that area where people get a lot of benefit. And that's how we are planning to recover that. And then coming to the repayment, we have certain plans. So 10 years back, I was commissioner. I've never heard of these, municipal bonds and going to the market and raising funds from the market. But after that, after 10 years, now if I see, there's a lot of confidence in us that yes, it can be done. Looking at the market, that we can generate the revenues from there. And in the last 10 years, government has done a lot of reforms in urban areas. There were schemes linked to the reforms. Without reforms, you don't get the funds. So we are forced to do certain reforms, and we are getting prepared for this, and it's exciting.
If I may add to the reply that he has just given, we need to have innovative projects taken up. We have to have an innovative structuring of our bonds, and we have to have an innovative use of it. Most of the time you would see it's essentially either on as he has mentioned, on the infrastructure, which is like roads, bridges, culverts, etc., etc. I just want to take a minute explaining there are 2 very different kind of bonds that we are looking at from Madhya Pradesh government. One is temple bond. Nobody has ever heard of temple bond coming up. And today we were in discussions with SEBI, Mrs. Chima, we were having discussion with NaBFID, Mr. Mittal. What we are coming up is, we are wanting to create infrastructure development in and around the temples in Ujjain, in Mahakaleshwar area, where we are looking for a Kumbh to come in 2028. We create infrastructure, we create experiences for the pilgrimage, and from the donations, we would repay the bond money. Now, this is already in place. We have our merchant banker in place, we have the rating agencies in place, and we have sufficient money right now sitting with us in the form of FD, in the form of continuous donations coming in, which we want to fund it. So that is one product that we are coming into the market, and I'm sure that there is an appetite for that kind of a thing. The second innovative project that we are coming up in Madhya Pradesh is a pooled finance for a floating solar battery storage project to be used, the generation to be used captively by all our municipal bodies. Now, one of the reasons why municipal bodies are not able to raise bonds is because they don't have a repaying capacity. In this product, when we pay per unit charges to the distribution company at a rate of 7 rupees, instead of that, I'll be paying around 3 rupees 50 paisa. And from the savings that we earlier used to pay, we will be able to repay the bond money as well as to pay to the developer. So if we go by these kind of products, and we will be able to tap the subsidy given by the Renewable Energy Department on the floating solar with the battery storage, and we'll also be able to tap onto the subsidy that is being offered by the Government of India, Mahua. So the idea is that if you have that kind of products coming in, I am sure that there will be enough market available. We just have to create that bouquet of opportunities for a retail as well as private investor. And by the way, these are going to be public issues. They are not going to be private issues. So we want every investor, as Mr. Mittal was saying, we need to go to Bharat, we need to go to every village, we need to go to every individual who can be a partner into this development.
Oh, very, very well said, because we're moving on from urban infrastructure to temple bonds and green bonds and renewable bonds and whatnot is coming. What is your sense now? Because we're looking at more and more states coming in, and thematic bonds, do you think is the way to go ahead?
This is very interesting. So I've been to Madhya Pradesh a month back and I heard about this, and this is very innovative. The message, the underlying message everybody should understand. When what Mr. Mittal said, what Sir said, what he is saying, we are in a habit of taking loan for a purpose without structuring the purpose back to the repayment. Okay. So the purpose is served and then the repayment is happening because of various things. So mostly cities in India, I don't think barring 4, 5, 10 cities maximum would be thinking in a manner that if I have taken a loan or if I have raised the bond, I will repay it. They will depend upon the government funds and the budget would be there. Many merchant bankers and the many financial institutions would be here and they will proudly say that we have structured the borrower's balance sheet in such a manner that the credit has enhanced or something. So it is again, they will be talking about the balance sheet. So mostly we are doing this thing with the balance sheet financing. Till the time we make a departure from the balance sheet financing to the project financing, we are going nowhere. Because the project financing is what is to be stuck. Means we have to go deeper into the project financing rather than only looking at the balance sheet and raising the fund on the name of the entity, not on raising the fund. And you would see these things. There would be many people who may agree or disagree with me also, but I have seen in my life that the project would be aligned with would be stitched to the bond name. But no, and there would be balance sheet prepared, the cash flows would be prepared, futures would be there, but there would be nothing, this would be coming. Let's say water project is coming in Pune and they are raising a bond. I don't know any water project would be able to fund itself if the capital expenditure or something is to be done. No city, because this is not a road that if I don't pay a toll, you would not allow me to go. If I am thirsty, you have to feed me the water. Okay, the water is not that if I am not able to pay the water tax, you will just cut my tap line. You can't. So when we are talking about the municipalities, we need to understand, first of all, yes. So what sir has said, what Mr. Dubey said, that yes. So if he is looking at the funding certain infrastructure around a project. So let's say temple was a theme. So there is a project. And then I'm structuring, then there is a religious tourism which is happening, then there are people who are contributing to fund that activity. They are doing the donation, okay, the donation is again not a stress on the balance sheet or the government and not on the city's balance sheet also, and it is funding itself. So people are going, people are paying. Now these people are paying only from the unstructured, informal ways of paying as per my capacity, I am paying my donation and I am paying my respect to the God or whatever the form we have derived at. But when it comes to the structured market, I don't know, I don't see any people, like I have just arrived only an hour back or something, I have not heard, many people may have said it. But even in the country, if you go to the bond market, first of all, first thing is sure, the excitement is there to issue the bond. Okay, to that much excitement I can see from 2016-17 onwards, when that bond subsidy, the interest rate subsidy had come. But after that, when the bond goes to the market, I was part of one bond which was being bidded out in the stock exchange, and there were two banks who were bidding against each other, and finally one banker bid, and then the commissioner called the other banker, no, my deposits are in your bank, why don't you bid it? And he bidded it. So it is again the bank finance. It is nowhere the people financing the infrastructure. So it is the bank finance come in the form of bond. Till the time, I think we all are understanding this, that the individuals have to come to this thing. So when this goes to the individual people, then only the things would survive. If you take it to the masses and the masses start funding itself, like tolls. Tolls are a classic example of anything successful. Airports, we can understand, anybody who is going to the airport may not be able to see the charges I am paying to the airport operator or the airport authority. But if I am passing the road, I know that I am paying 30 rupees toll, and then also people are paying. And that is what is making it successful. We come back to again annuity, then annuity is again financed by the banker, and the bank is again by the depositors. So we are into the loop. We have to come out of this loop and we have to take it to the masses. This is the question on the thematic. Yes, theme, I treat it as a project. If anything you do like this, I wish sir a very good success on this, because this would be something that the people would be coming and paying for something. And when the people come, when the masses come, this becomes successful.
So municipal corporations clearly and states seem to be raising quite a bit of, at least they're getting in, they're preparing, they are aware of this now. But Mr. Rai, the repayment part, now let's just come to that, and not each project perhaps or each bond repayment may be as easy. And I'll come to you with that as well after what the points that he has raised there. But what is your sense on this?
See, it is, we should not be generalizing all fundraising like this. Because today, solid waste to power.
there is a power purchase agreement with the electricity board. It is self-financing. So we have funded many of these projects. Solid waste to gas is another thing. Public sector bodies buying the gas. So these projects actually municipal bodies can do without their balance sheet also, because this will be PPP projects and they have to only structure it right, so that the solid waste reaches that point. So there should not be any issue around that, and then the PPP, the party takes over. Similarly, on the treated water. Now, any thermal plant is supposed to use treated water from a nearby town. Now, actually, we have funded these projects. So they pay for the water, what they get. So now, actually, these are all self-financing bodies and all that. So there are very few general issues on the balance sheet. Now, when we talk of temple fund, morning I was with Mr. Dubey sir. Actually, they have structured it so well. The assets getting created out of this fund, they are revenue generating. People pay for the use of the facility they provide, and that money gets escrowed. Now, all the municipal bond, Mr. Mittal also works on that. The revenue streams are being escrowed to meet the repayment. So it is not very generalistic thing of earlier times. Now today it is better structured. We have learnt our lessons. It is not on the balance sheet of any urban body that they collect money and pay. Every project is sliced in such a way that the revenue streams are very distinct. He spoke of the solar project. Now what happens is a PPP player comes in. They do the all facilitation. And then that fellow will sell the power. And that revenue stream will repay the bank. So I think it is structured well, and see, there are issues around urban local bodies. We are looking at a domain of at least 800 local bodies which are capable of borrowing. Because again, I mentioned a number of urban infrastructure need of the country for 2047. There is an estimate, the requirement is 770 lakh crores. Out of that 350 lakh crores, nearly half of that is supposed to be spent on urban infra. If this is the number we are looking for 20 years, then urban infra, how it will be funded? It will be through this bond market. So, and it will be project specific, it will be properly escrowed, giving safety to everyone. See, generally, I said the perception issue in the beginning. So, many of these are because of our bad experiences of last decade. Now things have moved on. Actually, today every bond issuance is structured very well.
So let me come to you with a final question on exactly that. You made your point that sometimes it's self-finance. It needs to be structured better. You have to ensure before you launch a band on how you're going to repay it. And then, of course, it is about toll system and etc. There are various ways to do it. Let me start with you since you're holding the mic then. What is it, and we have 2.5, 3 minutes to wind this down. What is your sense? What is it that you would tell a municipal body, corporation, on what is that one thing that they should keep in mind to make their issuance a success?
I think sir has already mentioned, urban local bodies have a serious governance issue. Actually, they need to fix because their accounting standards are very, very poor. The balance sheets come out after 3 years. The bond market will not accept all this. So urban local body has to get their act together. They have to collect their revenues like property taxes, water tax in time. And once they do that and put a proper balance sheet, and once they issue a bond, then there is a commitment actually. See, there are 22 municipal corporations who have issued bonds till date. And some of them are repeatedly doing it. And they are very successful in issuing bonds. And last year, at least 7-8 new urban local bodies like Agra, Varanasi, Allahabad, these are the bodies who came for the first time. Small issuances, but they all came. So now that means they have fixed their governance issue. In a way, indirectly, by issuing bonds, they are fixing their governance issue. Because otherwise, SEBI will not allow them because they have to come with their balance sheet. So that's why, in an indirect way, we will force them to follow governance standards.
Yeah, you have to be transparent in our operations. There is a little bit of opacity when the investor wants to come in. Adding to what he has already mentioned, because unless we have transparency in our operations and the people are able to see as to where the money is going, people will not have, or the citizens will not have confidence into getting into the bond market, because everybody out of the way would ultimately will look at whether he is going to get the money back what he is making the investment. And I feel that SEBI and I would say NSE, the exchanges have done a tremendous amount of job of facilitating that. For the first time, the SEBI is allowing pooled finance, because not every municipal body will be able to get into that level in a year or two. And that is why we are looking for a pooled finance in Madhya Pradesh, that everybody has to prepare their balance sheet. They have to come up and become transparent in their operational issues. And once they are able to do it, they will gradually graduate to a level whereby they can separately or alone, they can go to the market and raise the fund. So I feel that there is a lot of things that is being done at the government of India level, the state government level, and it is now turn for the municipal bodies to become transparent in their operations. And once they do that, there is no dearth of
No
money
looking
coming.
back.
Yeah.
Okay.
So one thing, I think we touched upon that public-private partnership also. And yes, this is like an if economic revolution has to come, it has to come through the alternative financing. Public-private partnership remains the key. We cannot do everything possible from the government money or the taxpayers' money. User money has to come. For the user money to come, for the private sector to come and participate, the one thing, if I have been noticing for almost 20 years of my services in PPP alone, payment security system from the municipality has to be robust and should be very, very clearly visible. And even if the project is not able to finance because the tariff rate cannot be, or the water cannot be raised volumetrically or something, at least some revenue has been escrowed to the to repay the concessionaire. Same would go for the bond. If the municipality is good enough in doing their good construction on time, because PPP is not only about the alternative financing, it is about the alternative management also. So if they are able to do this, then PPP costs you around 12 to 13% on the WACC terms, on the weighted average capital cost. Your municipality can do it at 7 to 8%. And with this 7 to 8%, the same as mechanism, if you can evolve, you can repay your fund, you can repay your loan, you can do your things. One thing I would like to tell, if the city managers are here, Bangalore is already here, sir is already here. The countries are known by the cities they have. We know Paris first, France later. Okay, so if we have to grow in the country, the cities have to grow. And the cities have to grow, the finances have to be secured and also robust repayment mechanism. For that, a payment security system, even if it is to be some kind of a guarantee from the state government or from some kind of an entity which is created, or the credit enhancement that he has talked about. There are various tools available. There is so much of intelligence and the knowledge here in this room. They all can work out, but this is to be ensured.
Very, very well said.
So on the repayment, I want to say one thing, that while the fund raised from the market is invested in one project, immediately I need to do the debt servicing. So if you understand the municipality fund flow, the property tax collected is first, the statutory deductions are done. Then the next step is running the institution, the SWM, the solid waste management, street light maintenance, and the road maintenance. Then whatever is left goes for the welfare, and then whatever is left goes for general development. So in these stages, where you take this debt servicing is very important. If I take it after running the institution, nothing is left. So probably after the statutory deduction, that is cess, library cess, beggary cess, immediately after that, if you can make this mechanism of accruing this fund for debt servicing, this will definitely succeed. We have come a long way. No corporation, big corporations at least, in a situation where they cannot run the show. At least they have to run the show. To run the show, a step before I would have paid my debt servicing, I would have done. So this way we can plan, and this is workable, I see. Thank you.
Well, this was easily my favorite panel till time here, and a great knowledge sharing here. Thank you so much, gentlemen. So much work being done, and municipal financing, or rather the infrastructure and urban way of raising funds now via bonds is something that really needs to be growing here. Thank you so much. Really appreciate your time. Thank you.
India Bonds presents CNBC TV 18, India's Fixed Income Summit.